Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dongjia Cheng, Tony. Now let's get started with tonight's Kuan Yin Good Night session. So tonight we have two main topics, and there's also something I need your help with. First, let me tell you, I've posted something in the comments section. I've posted a question here in the chat room. I'd like to ask everyone what you think about the US dollar and the US military's sudden moves, as well as Common A's actions. That's the first question. Option A is awesome. Option B is no feeling. Option C is making things worse. So A, B, C, please help answer the question, everyone. So in order, the first thing we'll do is talk about how the US stock market performed last Friday. Actually, the US stock market went down last Friday. The attack on Iran happened on Saturday, so today the market's focus is actually on the situation between the US and Iran, but everyone seems to be overlooking the fact that last Friday, actually both Thursday and Friday last week, the US market didn't perform particularly well. All right, so let's take a look. What exactly is causing the US stock market to drop? Then we'll take another look at the Iran issue. Also, I have a question for everyone today. I hope you can give me some feedback. So first, let's review last Friday's performance, and then when we get to the second topic, as more people join in, I'll discuss it with everyone. I see there are some comments, so we'll also take a look at everyone's opinions on that question. All right, so the main thing is, let's look at last Friday, actually Thursday and Friday, the US stock market, specifically the S&P, dropped. It was about 1%. On Thursday, the S&P fell 0.54%, and on Friday, it dropped another 0.43%. There are a few issues here. The first one is about earnings reports, why stocks don't go up even when the earnings are positive. Tech stocks have continued to correct, and this trend started on Thursday. After Nvidia's earnings report was released on Wednesday, the market was pretty disappointed. Also, when it comes to financial stocks, they're actually facing two headwinds. One is issues with credit. Let's take a look at that, because it's something we need to keep monitoring. The other is the overall performance of financial sector stocks, which is also a concern. As for AI, besides squeezing out software stocks, AI is now starting to put pressure on some financial stocks as well. So we want to especially remind everyone to pay attention to this, and we'll discuss this part with you too. Also, the PPI data released on Friday came in higher than expected. But we should mention something good. On Friday, US Treasury yields actually fell, so they didn't really reflect the inflation issue. However, Excuse me, I'd like to have some water. The market's main concern is actually due to the correction in US stocks. The PPI reflects this safe haven demand, so it hasn't reflected the impact of the higher than expected PPPI. However, we still need to observe. The underlying trend isn't so optimistic. Another key point is the trend of economic slowdown. The pressure from the slowdown is actually gradually increasing, so we need everyone to pay special attention. This could be an impact that's possibly no less than that of a war. So let's quickly take a look. For our first segment, when we get to the Q&A, I'll check everyone's answers then. Yeah, the main thing to note here is that this is a classic case of good news not driving the price up, like with earnings. Whether it's revenue or profit, the price just doesn't go up, and that's really not a good sign. Over 2 days, it dropped 5.1 points, first by 5.46, then by 4.16. Most importantly, it hit a key level here, which is it was still above the 200-day moving average, but then over the weekend, there was this situation between the US and Iran, a military conflict, an attack. So regarding this part, in fact, futures have already opened lower. If the market opens even lower today, it's going to put a lot of pressure on Nvidia and the entire market. So here's what we're looking at. We have to be honest and face this together with everyone. We're not going to be blindly optimistic, but of course we also don't want to be overly pessimistic either. When we see risks, we still need to explain them to everyone. Why? Because if it falls below the 200-day moving average, well, the pressure will be greater. It's pretty significant, especially since it's been consolidating there for almost half a year. That means once it drops below, the short-term moving averages might quickly start to reflect this. And the pressure of the stock price starting to fall will begin. When the moving averages cross over like this, it's definitely not good for the stock price. We want to remind everyone of that. We have to face this issue head on. Now, moving on, the main thing we need to look at is that the market is pointing out a problem. Namely, that although its financial reports are very good, if we look at it from the perspective of future price to earnings ratios, since we're focusing on the future, you might say the fundamentals are good, but the stock price keeps dropping. What does that actually mean? The denominator here changes, and that actually causes the price to earnings ratio to be revised downward. So compared to before, when the company was in a high growth phase and the PE ratio was still high, but revenue and profits hadn't really materialized yet, now things are different. Because before, its P/E ratio was relatively high, but now, even though the P/E ratio is lower, the stock price is still dropping. Here, it mentions a forward P/E at 22 times, with a 5-year average of 37 times. This is a rather strange phenomenon. Some people say it looks like a value stock, but that's actually not the case. What this really highlights is an issue with its valuation. The overall momentum is slowing down. So why is that? Why is everyone so worried about this? Mainly because there's a divergence between performance and stock price. So what is the market concerned about here? The main thing the market is worried about is CSP providers. Even though NVIDIA's financial reports look great right now, people are worried about whether the upstream providers might, at some point, stop increasing their emergency spending like they used to. This is exactly the issue that the market is starting to worry about now. And so right now, it looks like people have already started to worry about this part, but when we look closely at the data, we can report that this concern probably won't materialize in 2026 or 2027. It's more likely to happen in 2028. But the problem is, since stock prices have already gone up a lot and expectations are high, even just a little bit of with even the slightest sign of trouble, everyone gets a lot more alert, right? So here, I want to talk to everyone about what happened after NVIDIA released its earnings report last week. Okay, I mentioned this before. Actually, I talked about it in the members-only show. Now that some time has passed, I can talk about it here too. So I showed you a weekly chart back then, right? Basically, the weekly chart have been consolidating there for about half a year. So looking at it from the weekly perspective, after NVIDIA released its earnings report, it really needed to show some performance. Of course, at that time, because the earnings report was pretty good, right? That was a Thursday morning show, and the numbers looked good. It was positive news, so we were hoping for an upward move. But instead, it went the opposite direction, so the pressure on it is going to be heavier. Now, let's also take a look at the performance so far this year. Ideally, it should be much better, and of course, that's mainly in energy. We'll see that in a moment, but that's the main point. The impact of war is a factor here, so energy stocks have been rising along with oil prices. But the problem is, which two sectors have dropped the most? First is information technology, and actually the biggest one is finance. As we saw last Friday, that was mainly affected by the credit crisis, the so-called credit cockroach issue. And the second one is information technology, which is relatively weak. So, of course, this has led to a situation where some hardware stocks just aren't going up, even when there's good news. This is the most direct reflection of what's happening. So what we want to point out is that this is also being reflected here. Now, to be more straightforward, what we're really telling you is that those tech stocks that went up a lot last year haven't been doing well so far this year. We're already 2 months into the year, and honestly, tech stocks just haven't been popular in these first 2 months. Also, while we're at it, let's go ahead and take a look together. There are a few sectors that are really worth paying attention to. First up are the material stocks, which have gone up by 17.63%. Of course, this is mainly driven by companies involved in copper and some lithium mining, which saw significant gains earlier. But we also need to pay attention to a few other things that might be important. Let me specifically mention two sectors here. One is industrials. As for consumer staples, we won't discuss those for now because that category is a bit more detailed and complicated. So let's talk about industrials. The industrial sector includes defense stocks. Lately, as you know, whenever there's talk about US defense industry stocks, their prices really take off. These past few days, you can see they're not weak at all. Another sector that's especially worth paying attention to is utilities. Why? Well, there should be a sub-index for it, which we'll talk about in a bit. Looking at utilities right now, it seems like in the future, this sector might even be stronger than real estate, even more solid. So why are we bringing up this topic first? Because last Wednesday or Thursday, Trump made an announcement. He mentioned in the news that he had a request. He hopes that American data center operators, they need to be responsible for generating their own electricity. But here's what we want to explain to everyone. First, if operators have to generate their own power, there are a few options. The first is nuclear power, even if you use small modular reactors. The investment required for this is just way too high. Okay, so the funding and financing part's a big challenge. Second, with these SMR modules, the timeline is just too long. It'll take about 8 to 10 years at least, and even if you speed things up, it'll still take 5 to 7 years. This electricity is probably going to be needed in the next 2 or 3 years, so that's a huge requirement. And then, nuclear power is great, but it's just too difficult and takes too long. Second, coal power is pretty much impossible. Maybe more feasible in the US, but here, why is it impossible? Because it just can't pass the environmental regulations. So everyone can just forget about it and go to bed. As for the demand for electricity, this option is basically off the table, so that's that. So what's the most likely option left? It's gas-fired power, meaning natural gas. In the US, especially with shale oil extraction, natural gas is a byproduct, so there's plenty of gas here. Also, building a gas turbine power plant is much faster than building a nuclear plant. So whenever I get the chance, I'll explain this bit by bit as we go along. Stocks related to coal power, nuclear power, and gas power have actually been really hot in the US lately. So if you're looking for something with a bit more protection in this kind of environment, this is something you can take some time to look into as a reference. Its direction is good. Now let's take a look at why things aren't looking so great. Actually, if we look at the 7 tech giants, tech stocks are pretty weak. They're showing a downward doji, so that's not a good sign. Google and Amazon went up, but the other 5 went down. We'll also take a look at the individual stock charts in a bit. It really feels like there's a lot of resistance up there. Also, the Philadelphia Semiconductor Index is down as well. Let's take a look at what's next. After Hawaii's earnings report was released, not only did Hawaii itself go down, but you can also see this. It dragged down the entire Hawaii, and this reversal in the trend of chip stocks is a sign of that. Although they're still on an upward trend right now, we need to be aware that because of the conflict between the US and Iran, there's significant downward pressure coming up. So you need to be careful here. Chip stocks actually are the same. They're not as optimistic as they seem. So it's the same with the STAR market, which is mainly tech focused. On Friday, it was slightly, oh, sorry, my mistake. This hasn't been updated. On Friday, it dropped 0.92%, and on Thursday, it had a big drop of 1.18%. So the pressure here is pretty significant, especially when we look at it. The 50-day moving average is still slowly trending downward, but the monthly moving average has already started to press down. So in the short term, the correction pressure is pretty heavy. The S&P is in a similar situation. Both Thursday and Friday were down. Sorry about that. I didn't get the numbers quite right. One was 0.5, the other was 0.43. Tomorrow, I'll pay more attention and make sure the percentage changes are more accurate. Also, there's something pretty unique we need to look at, which is why I said the market still holds on to a bit of hope. But honestly, this hope might not be what everyone thinks. So just be careful, okay? We still need to be cautious. Where does the hope lie? The hope is that we saw the S&P 500 equal weight index was up slightly by 0.09% on Friday, and on Thursday it was up 0.63%. It looks like there's some promise in sector rotation, but the challenge with sector rotation is still there. Why? Because the tech sector, which has a heavier weighting, is still dominant. Is it non-core consumer stocks or financial stocks that are better? Actually, these three main sectors are really five in total. Besides those two, the others are healthcare and communication services. If you add those in, that makes five sectors. And if you add industrials, that makes six. These six sectors actually make up more than half, almost 60% of the Dow Jones, if I remember correctly. That's my impression. I'll double check and update you tomorrow. So these sectors carry a lot of weight, but the issue is, among them, information technology, non-core consumer, and financial stocks are relatively weak. So the hope for rotation in this market lies elsewhere. The probability of volatility is even higher. Let me just mention this first. This is something you need to pay attention to. And as for financial stocks, what are they facing? First, there are issues with credit. AI is also squeezing the financial sector, especially regarding credit problems. On Friday, there was news out of the UK. That's right, it was a British company, but the impact was felt in both the UK and the US. In fact, the UK stock market's reaction was relatively minor, while the US stock market reacted even more strongly. So MFS, Market Financial Solution, if I had to sum it up in one word, it's something everyone is familiar with. It's called shadow banking. Basically, when big banks aren't willing to lend, these guys step in and make the loans instead. So this company over in London filed for what's called bankruptcy protection. And that's pretty bad because, well, they're supposed to fill the gap between big banks and financing needs. You know, in the US, it's not like Taiwan. Most big banks there only serve top-tier clients. So the more marginal clients, they just hand them off to these companies to handle. But the problem is these operators are actually borrowing money from those big banks. So it's like they've created a sort of middle layer between the banks and the clients. But the issue is, it looks like they've run into a problem, which is that the quality of these loans has become an issue. These mortgage loans have actually been sued by creditors, saying that there's a £930 million shortfall in the collateral for a £1.2 billion mortgage loan. The banks providing these loans include Barclays and other Wall Street investment banks. Now, let me mention something here. The issue here is, as I just mentioned, there's a £1.2 billion loan, and the shortfall could be as high as £930 million. Now, that's the creditor's perspective, but it still needs to be clarified. However, there's a possibility that what's happening is repeated collateralization or double pledging, meaning I might use the same collateral for a loan with Party A and also with Party B. Borrowing from Bank A, then borrowing from Bank B, and then from Bank C, this is entirely possible. This is a classic case of poor loan quality control, and honestly, it's pretty bad. Now, let's take a look at this. At the moment, the amount involved isn't that big, but the problem is that the market is really worried. Why? Because previously, JP Morgan Chase CEO Jamie Dimon said something about credit cockroaches. If you see one cockroach, it means there are more, maybe a whole nest of them. So here, when we actually see a real case emerge, and not just in the US, but also in London, everyone becomes a bit more alert. So this is something we need to pay attention to and keep tracking. And as luck would have it, similarly, just recently, last week, Apollo Global Asset Management, they have a BDC, a business development company that makes direct loans, announced a dividend cut and marked down their investment portfolio by 3%. In other words, they've already started setting aside provisions for bad debts. This direct lending development company, which is basically the same kind of shadow bank we mentioned earlier. Both of these, 200 million, happened last week on the 26th and 27th. The 26th was Thursday and the 27th was Friday. So these events weighed on last week. US financial stocks didn't perform well. Also, last Thursday after the market closed, this fintech company, Black, they're in digital payments and their platform's called XYZ. During their earnings call, they announced they would lay off 4,000 employees, almost half of their workforce. So the founder, Dorsey, said that AI will change productivity in the future. For many companies, this ultimately means they'll have to lay off employees and slim down. This is a pretty clear example of how AI is putting pressure on companies lately, and now we're seeing the financial industry feeling that squeeze too. That's why people are making these associations. That's been happening more and more. So last week, financial stocks were really weak. Now let's take a look at this. The banking sector index dropped sharply by 4.85%, which shows this area is pretty weak. And then, what about the S&P financial sector stocks? They also dropped by nearly 2%, and the monthly trend is starting to turn downward, so the pressure here is pretty significant. Especially, let me add a bit more, later on when we look at it, if we consider this, looking at the Dow Jones component stocks, Goldman Sachs dropped, and American Express had the biggest decline. Also, Capital One and the U.S. company First Capital. These companies, which mainly deal in credit cards, also saw significant drops. So that's the situation. American Express also does credit cards, so now there are already two credit card companies with significant declines. Actually, both Visa and MasterCard didn't perform well either, so we need to especially point this out. Maybe I'll keep bringing up this part about the financial sector, because for this sector to stop falling, if it doesn't stop, it's going to be pretty troublesome. Plus, this is something we need to track in the medium to long term, the quality of bad loans. We have to check the ratio of bad loans to make sure it's not too high. Otherwise, if we don't confirm this, it could become a big problem. This is basically the experience we've had in the past dealing with similar issues in financial stocks. So I just wanted to let everyone know that we need to keep a close eye on this. Whenever I'm doing my evening updates, if I see any news, I'll make sure to keep track of it for you. If you remember and you don't see it, don't worry. If anything comes up, we'll keep an eye on it in our members-only program. All of us, including the general manager and our rotating instructors, are already aware of the situation and will be watching the news closely for any updates related to it. Also, the Dow Jones is down as well. Besides that, let's take a look at Friday. There was another drop, specifically in the PPI. Actually, the increase in the PPI was driven by the service sector, which shows that inflationary pressure is still present. So what's actually worse here? What we're seeing is the year-over-year PPI. Looking at the month-over-month numbers, it might not seem as bad. Doesn't feel that bad yet, because when you see 0.5 or 0.8, you think, yeah, that's kind of high, but not terrible. But when you look at the numbers at the end of the year, the PPI is 2.9 and the core PPI is 3.6. Doesn't that number seem a bit concerning to you? In fact, it really is a bit bad. So let's look at what's really going on here. Take a look at this chart below. That one. So the blue line, that's all month over month, that's right. But if you look at the black line, that's the core, and then this one is the nominal. The green line is the core, and you can see it's starting to rebound. In fact, it started rebounding in January, and you might feel like that's not really a good sign, even though like last year and the year before, well, last year in January 2025, the rebound was pretty obvious, and then it dropped off. But in January 2024, there was a rebound, but in February, the drop was not that significant. Now, what is more important is to look ahead. Right now, it is true that the service sector is driving things, but the real issue is what comes next. The short-term sales prices over several consecutive months have further confirmed and verified that progress in fighting inflation is slow. Also, the increase in import tariffs on certain goods has led producers to either raise prices or look for other ways to protect their profits. So, like I said, it's really either raising prices, changing packaging, or using various methods to protect profits. In other words, passing the costs on. Alright, so you see the PPI numbers are going up. The way it's written is very subtle, but you have to realize the pressure is significant. If the PPI keeps rising, it will inevitably get passed on to the CPI. This is something really important to pay attention to, especially after the outbreak of war. Oil prices are even more likely to keep rising, so this pressure is going to be pretty significant. But we also want to remind everyone of something else. Another thing people tend to overlook is that the pressure from slowing economic growth is actually gradually increasing. Why do I say that? Because these numbers are actually released on February 20th. So what was happening on February 20th? We were celebrating the Lunar New Year then, so it was easy for everyone to overlook the US GDP numbers. So I want to especially remind everyone about this. Alright, so of course, the growth rate for the fourth quarter was only 1.4. The previous quarter grew by 4.4, but then it dropped to 1.4. And of course, there was a main culprit. Last year in the US, starting from October, the government was shut down for over 40 days. So that means in the fourth quarter, especially in October and a big part of November, the government was basically shut down. Of course, this would impact GDP growth. But according to estimates here, GDP growth was 1%. If you add that back to the 1.4%, it would be 2.4%. Yeah, that's a bit better, that's true. But the problem is, what was the quarter-on-quarter annualized growth rate for the previous quarter, the third quarter? It was 4.4, right? So if you look at it, it's still cooling down. And there's one more thing. In the fourth quarter, the government shutdown cost 7 billion TWD. Well, what was lost be made up later? Anyway, it can't really be made up because some services or things that go into GDP, if they weren't recorded that month, then they're just not recorded, period. If it's recorded later, it just gets pushed to the following period. And of course, there will be other variables coming into play then. So what I want to tell everyone is that the pressure on economic growth is actually starting to take shape. Even though corporate profits and the PMI don't look that bad right now, we still need to pay attention. After all, when you look at the overall economic data, there is indeed a bit of a lag, and the details can be pretty complex and messy. So be careful. If the details aren't good, that's something to watch out for. It could still end up being a problem for everyone, right? Okay.
All right.
So on Friday, we saw that U.S. Treasury yields dropped quite a bit, and the main reason was that it was reflecting the sharp decline in the stock market. But then on Monday, the first thing we saw was a rebound, and the same goes for the 10-year Treasury. You can see that the 10-year Treasury also rebounded on Monday. Last Thursday and Friday, the declines were pretty significant, right? So it really felt like there was a demand for safe haven assets. And this demand for safety didn't even factor in the risks of war yet. The drop was already pretty big. Today, there was a rebound, but the thing is, we're talking about pre-market numbers here. What really matters is how things close tonight. If the situation between the US and Iran gets worse, and if US Treasury yields end up leaving a wick on the chart, that would be pretty bad. It's definitely possible. If the correction in US Treasury yields continues and the 10-year yield drops too low, that's not necessarily a good thing. If it falls too quickly, it reflects a more pessimistic outlook for the future. So that's something we really need to pay attention to here. Let's use the next chart to talk about the probability of rate hikes and cuts. This shows the full year probability for 2026. Looking at it here, it's now back to around negative 0.58, which means there's room for about 2 rate cuts this year. The Federal Reserve is still saying, well, still indicating that just 1 cut for now. And of course, in the future, well, during Powell's term, at least until May, I think it's likely there won't be any moves. Because now that we're seeing the PPI going up, unless there's a significant deterioration in economic growth, they probably won't cut rates. Otherwise, there shouldn't be any changes. All right. But by the end of the year, there's still room for 2 more rate cuts, which is good. But another thing to pay attention to is the inflation numbers. They're still quite problematic. For example, the PPI is still stuck at a high level. If it stays around 2.3, or say if the core PCE or core CPI are still at 3, then the actual room for rate cuts will be very limited. No matter who's in charge, there probably won't be much space for significant rate cuts, and that's really bad. Ideally, inflation should gradually come down, and by the end of the year, if we look again and see that there's more room for rate cuts, that would be much better. The problem is, given the current data and the changes in the international situation, it looks like the pressure is pretty high. So it's more likely that there will only be 2 rate cuts this year. Now, let's take a look at the US-Iran conflict. Let me start by sharing my conclusion on this slide. First of all, I think that up to now, this has been a case of tactical success but strategic failure. The main thing is the first week to the first 100 days. The scariest part is within this period. The first week to the first month is the most frightening. Why is that? The exchange of fire between both sides is likely to be the most intense during this period. The real thing to watch is whether real negotiations will begin within the first 100 days. The reason I bring this up is because, as we'll discuss in a moment, if the supreme leader dies, then who are you supposed to negotiate with? That becomes a major issue. We'll get into this more in a bit. Now, looking at the midterm, after the first 100 days and up to a year, in theory, the market's reaction to the war should gradually fade. But the thing is, I need to make this part clear to everyone. As for the long term, after a year and looking far into the future, this becomes a much bigger issue. The turmoil in China will continue. However, the good news is that if the Comm Strait remains open, the impact on the economy will be limited. But externally, the geopolitical effects will be long-lasting. Let's talk about this first. Now, regarding tactical successes, on Saturday, Israel launched an airstrike against Iran. So it was Israel that took the initiative. Later, there were reports from the Associated Press saying that the US was involved, and eventually the US itself came forward about it. After Trump also made a statement, everyone started to believe that the US and Israel acted together. Later on, people no longer thought Israel was leading. Instead, they said it was the US military taking the lead. But in reality, Israel was actually the one leading at the very beginning. Let me highlight the main point here. Of course, Israel acted very quickly. We saw that right away. Iran's supreme leader, Khamenei, was killed in a bombing on Saturday. He was 84 or 86 years old. All right, now let's take a look at this. The strategic failure here is that you've already killed Khamenei. I'm not asking for everyone's opinion right now, but let's take a look. Someone said May Daisy said B, then someone else said C, Xiaomao Lu said C, and Desmond said A++, and there are others who said C. There are some B's, a C, and a lot of people chose C. So,
What?
I want to tell you all, this is my opinion. I think Western medicine is helping to bring down Mao Zedong. Why do you think it's so great and that he deserves to die? Let me tell you, you're right. It is. Religion is a good way to hide one's true nature. He's someone you don't like, but we're talking about a strategic aspect, so it's not wrong for you not to like him. Whether Putin likes Zelensky or not, I believe Putin absolutely doesn't like, won't ever like Zelensky. But just how smart is Putin? This old fox is so clever that he didn't kill Zelensky, because as we'll see in a moment, killing Zelensky would be just like killing him and I. Afterwards, your problems would only get worse. So why did the strategy fail? There have been rumors for a long time that he's 86 years old and often has cancer, and lately the word going around is that since last year, his health has actually been consistently poor. So let me put it this way. He's basically a man with one foot in a grave. All right then. So how do you deal with someone who already has one foot in the grave? First, there's natural death. Okay, so I think the smartest move, why didn't they take action during the general election? He's just too old. He's not capable of doing anything. He's just as corrupt, rotten to the core, embezzling, and all that. You can use all sorts of adjectives to describe him. As for Keelong, just ignore him. Give him the cold shoulder. That's one way to score big points. So what's a smaller score? A smaller score would be letting him get assassinated. You could, for example, have different factions within Iran take action, or maybe Mossad could do something. So these agents could just carry out a special operation and kill him directly. This would highlight the divisions and lack of unity within Iran, suggesting there are insiders or people taking action from within. That would be a small score. So what would be a big score? That would be if he were killed directly by the US or Israel. Why? Have you ever thought about it? Sure, you might not like him, but the thing is, Iran is a theocracy, right? Its highest authority is the religious leader. And this particular religion has a tradition of martyrdom. If you blow him up, my God, he was already someone close to death, but once you kill him like that, someone who wasn't all that special suddenly becomes a saint. So what's the worst thing that can happen after you blow up a person, a religious leader? He has so many followers, so many believers. You'll end up creating who knows how many martyrs, and you really have no idea in what ways these martyrs might cause you trouble in the future, right to your face. So this is actually a huge problem. And then, after you kill him, who are you going to negotiate with next? That's exactly the dilemma Trump is facing right now. All right, now let's take a look at the US side of things. At first, Trump said it would be a limited war, so the bombings would last for several days, and then later on, Trump said on the 1st that there might be precision bombings lasting for a week until world peace is achieved. Then, on the 2nd, which is actually still the 1st in US time, when Trump was interviewed, he said the bombings would last for 4 weeks. I'm telling you, these precision-guided precision bombings will definitely go on for a while. But the problem is, we'll keep watching. Let's take a look. Let's look again. First, let's look at Iran's actions. When they started attacking, the first target was Israeli territory. If you look at Taiwanese media, they'll tell you that Israel didn't suffer much damage or something like that. But I want to tell you, Israel's land area is actually very small. I remember it's only about 2/3 or maybe half the size of Taiwan. Actually, Israel's territory is very narrow and the population is extremely dense. Last year, I already told you that by the end of the 12th day of the war, the reason the US intervened was because Israel just could not hold on anymore. If you launch a saturation attack, there will be breakthroughs in the defense. Even if a rocket only kills 1 or 2 people, it has a big impact on morale. You have to understand, Iran is fighting barefoot while Israel is fighting with shoes on. So who has more to lose? If you do the math, it's definitely not worth it for Israel. Second, the US bases and military facilities in Bahrain, Qatar, Kuwait, the UAE, Jordan, and Saudi Arabia will be attacked for sure. This is certain because these are fixed installations, so they will definitely be targeted. The US, well, unfortunately, the US is right around Iran. It's kind of Iran's fault for building their country right next to all these US bases. Sorry to say. But honestly, the US already has plenty of bases in this area. You can list them off. Bahrain, Qatar, Kuwait, the UAE, Jordan, Saudi Arabia. Pretty much the only countries left, the ones you might not know, are basically the ones where the US doesn't have troops stationed. And those places are pretty much a mess, like Syria, Lebanon, and Yemen. So yeah, that's the situation. I can only tell you that, actually, even fixed bases can get hit. They've been bombed, you know? And US Navy ships have been attacked. There were reports that Iran attacked the USS Lincoln, and also that a US supply ship was attacked. But what I want to say to everyone is basically, as for the results of these attacks, let's not jump to conclusions just yet. Don't be too quick to believe, no matter which side the information's coming from, because it'll still take some time before everything is fully confirmed. It's possible there were attempts to strike, but whether they were intercepted or not, we don't know. What we want to tell everyone is that there probably weren't any major losses, otherwise it would have been all over the news. As for neighboring countries, some Sunni nations got hit pretty hard, because Iran basically said that if anything flies out from those areas, they'll start attacking. I even heard that Cyprus was hit too, but it was intercepted. And then there's also Israel's proxies, well, actually, Iran's proxies like Hezbollah, the Shia militias in Iraq, and the Houthis are all already involved. So honestly, things over there are pretty chaotic. But it's just that right now, it seems like everyone still believes the US military has things under control. So we haven't seen any really bad news coming out yet, which probably means the US military is still managing the situation. Now, moving on to the next part, because honestly, it's not like we haven't been involved in wars before. What we really care about is when negotiations will start. Because as soon as negotiations begin, it's good news for the financial markets. Why is that? This uncertainty is really starting to go down, right? But what's bad right now is that President Trump said, according to Carl from ABC News, President Trump said this. Previously, the US believed they could take over or negotiate with certain Iranian candidates, but after the initial US military strikes, those options have disappeared. In other words, the US military killed the people they thought they could negotiate with, the ones they believed were possible to talk to. They killed the ones they thought they could negotiate with, and they also killed the ones they thought they couldn't negotiate with. So the answer is simple. It's just like that. Now, the US and Israel should actually have done what they did last year and the year before, well, it should have been last year, when they quickly took out senior figures from Iran and Hezbollah, like with the BB code operation back then. Besides using the BB code, they also used proxies. They know there are multiple layers of proxies, so they just take them out layer by layer. They handled things this way, but the problem is, this approach leads to another situation down the line, right? They did have a list, that's true. That's why at first they said it would only take a few days because they thought they could finish off everyone on the list in just a few days. But then Iran delegated its authority, and after they finished bombing, they realized, wait, that's strange, why is the fighting still going on? Missiles were still being launched, and then they realized, what about the second tier? For the second tier, the commanders on that list might take weeks to eliminate. They kept fighting for a week, and when they finally realized, yeah, they had killed them, but the authority had been delegated even further down. So it had already dragged on for several weeks. What we want to tell everyone here is that, in principle, command authority had already been delegated down the chain. The fighting would continue until Iran's missile capabilities were almost completely wiped out. Yeah, that's how it is. How long will it last? In principle, the so-called 12-day war, as we've mentioned, can last at least 12 days. Okay, so I believe that for Israel, when it comes to Iran, since their own people have already died, it's kind of like they're emptying their magazines, you know? I think they'll keep fighting until things get really intense. That's basically the situation. So we'll just let everyone know about that for now. And then on another note, Trump has already made it clear. So he said that the bombing will continue. Earlier, he also mentioned, sorry, but the people who could have negotiated in the first wave have already been killed. Then he said it's possible, and once again called on Iran's leaders to surrender. The issue with all this is that the people you thought you could negotiate with are already dead, so now you don't know who will be in power. Plus, under these circumstances, the atmosphere within Iran itself is also a factor. Right now, there won't be any surrender faction, no moderates, and no negotiations. All that's left are the hardliners who want to fight, because if you don't fight now, you'll probably just end up being trampled to death by your own people. So this part is really bad. And then there's another issue as well. Another issue is the potential casualties among US troops, which is a really important aspect. If we look at the experience from the Vietnam War, when the bodies of American soldiers were sent back home one after another, that Trump will be under tremendous pressure. So the hope here is that US casualties can be kept under control as much as possible. That would probably be a relatively, from a humanitarian perspective, that's generally how our society thinks. On another note, Iran's national security chief, Larijani, has stated that they will not negotiate with the United States. So right now, as for the US and Iran, the ones left are Larijani and the president. Both are still alive, but whether these two will come out to negotiate is still unknown, and whether they would even be recognized or allowed to negotiate is also uncertain. So Trump has now created a situation where no one can come out to negotiate. So this is pretty bad. Okay, let's take a look at the past. So how should we look at this from a medium-term perspective? Let's take a look. This is the 2020 MSCI World Index trend chart. Now, let me explain why we're using the World Index. It's because we still can't just look at the US stock market, since the war isn't happening in the US. So let's use the World Index for reference. Although, honestly, this index is actually too heavily influenced by the US and Europe. But for now, I couldn't find a more suitable index, so we'll just use the MSI Index's weekly chart for 2020. Back then, in January of that year, the commander of Iran's Quds force, Soleimani, was assassinated by Trump. He was killed. At that time, you could see that it actually didn't have too much of an impact. After that, roughly, I remember that this drop was probably due to the impact of the pandemic. So what I want to say is, actually, at that time, it really didn't have much of an effect. But the second thing we need to look at is the second time. The second Iraq War and the first war. That was the Gulf War. In March 2020, the US military launched Operation Iraqi Freedom. The Iraq War started, right? The fighting began in March. You see, as soon as it started, the trend went up. But let's talk about another one. If you look at another case, this one is from 1990, even earlier. Back in August of 1990, Iraq invaded Kuwait. Then in January 1991, the US military launched Operation Desert Storm. So you can see, whether it was 1990 to 1991 or 2020, after the fighting started, the global index began to rise. But that doesn't mean the index went up directly because of this. What's more closely related, and what's certain, is what happened in 1991. But I want to point out that you shouldn't assume it's always like this. What's the key? The key isn't that the market goes up just because the US military starts fighting. The key is that before the fighting starts, the US military is already seen as having control of the situation with a high probability of victory, definitely more than 50%. Sometimes the chances of winning are even 70 or 80%, which is why the market reacts that way. So what we want to tell everyone is, what we want to say is, if the US military is clearly able to control the situation, the financial markets will respond more positively. That's the real key here. All right, so in addition, we've also seen reports this time that 2 cruise ships were attacked in the Strait of Hormuz. Now, what we need to point out here is that the Strait of Hormuz is mainly important because a quarter of the world's crude oil is shipped through here. That's something everyone already knows. So let's focus on the main point here, which is, first of all, right now, no one dares to travel through the Strait of Hormuz. And where has the affected area expanded to? Down below, to the Arabian Sea and the Red Sea. Because previously in the Red Sea, it was in Yemen where the Houthi group is based. The Houthis' missiles are actually really powerful. Some say they're even more accurate than Iran's. So heading over there, you can see that no one would dare to go through that area now. There's no way anyone would risk it. So what we can be sure of here is that shipping times will definitely get longer, no matter what. So when containers are directly affected, bulk cargo will also be impacted, because after all, when it comes to shipping, you can see that such a huge area on the globe is now off limits. No one dares to go through it. Shipping routes are getting longer and freight costs are going up. All of these costs will eventually be passed on. So I just wanted to explain this to everyone. That's basically how it is. Also, looking at the long term, why do we say that turmoil in the Middle East will continue? First, if the US military actually gets involved and sends in ground troops, that means Iran's nuclear missile development capabilities and missile manufacturing capabilities, have those been eliminated? That's something we can confirm. But there's a high chance Iran will turn into a bigger version of Afghanistan. Afghanistan, when the US was in Afghanistan, they spent 20 years there, burned through $2 trillion, and only then did they finally pull out. And the way they withdrew was a total mess. That was a terrifying situation, a real nightmare for the US. If they really send in ground troops again, it could be the same story. That's a huge risk. Now, on the other hand, if the US doesn't get involved, right now, it's really hard to establish a pro-American regime there. And if you can't set up a pro-American government and can't go in to verify things, then there's no way to confirm whether their nuclear weapons and missile production capabilities have actually been eliminated. In that case, all your efforts would be for nothing. So what we want to tell everyone here is that this is a really big paradox. Why is it still a problem in the long run? Well, this issue definitely puts more pressure on the US, and it will impact the global economy, but it should be relatively manageable. However, for the US, it's a much bigger deal. Why? Because it's a war, and the US would be a direct participant. And secondly, back when the Gulf War was being fought, during the Iraq War, well, there was one time during the Gulf War, NATO participated, but the second time during the Iraq War, when the US took action in Iraq, I remember that only the UK and France were still involved, and even then, their involvement was pretty limited. There were only 3 NATO countries involved at that point. The key point here is the sharing of military expenses. There were others helping to share the costs, but if France, the UK, and Germany don't participate, or if NATO doesn't take any action, then the burden would fall on the US alone, and that would put a lot more pressure on America. So what we're trying to say is that when it comes to the economic impact, some of it refers to the global economy, but the effect on the US would be especially significant. But it should be manageable, so we need to keep watching this closely. Now, let's take a quick look at how the markets are performing. There was a slight drop on Friday, and the US dollar also fell, but it rebounded on Monday. What's more important, though, is what's happening with gold, silver, and oil. Gold went up 1.5% and continued to rise on Monday, and on Friday, silver increased even more. But what we want to point out to everyone is that the key thing to watch here is still Brent crude. Why? Because oil is actually at the heart of the Strait of Hormuz issue. It's not really about how big Iran's economy is. or how long the US plans to stay involved over there. The main thing is whether oil transportation will be affected. On Monday, oil prices did jump, but then we saw them drop at one point, and later they returned to around $78. Every time it jumps, when it spikes, it breaks past 80. The key thing to watch is the candlestick shadow. Today, I don't expect it to turn positive, but if the lower shadow is long enough, it means the situation is stabilizing earlier. If it's a long, solid candlestick, then it probably means things will get under control more quickly. Also, according to JP Morgan, if the Strait of Hormuz is closed for 25 days, the Middle East might have to stop oil production. Whoa, what does that mean? Basically, when oil is extracted, after drilling into the oil well, the oil gushes out. It's a blowout. So once the oil comes out, it has to be transported out using pipelines or oil tankers. Otherwise, there needs to be storage facilities nearby. If there aren't any, then they have to depressurize and get ready to halt production. They did a rough estimate of this situation. The remaining oil storage capacity and reserve facilities in the Middle East have been roughly estimated to last about 25 days. So this is something to pay close attention to. In other words, it's not that there isn't any oil, but if you can't transport it out, it's as good as having none. So that's the situation here. It's pretty bad, so you really need to pay attention to this indicator going forward and see how the situation develops, whether it's actually getting better or worse. Especially, don't rely too much on the news. Instead, keep an eye on how oil prices are behaving. If oil prices are really doing badly, then that gap will probably hold and prices will just fluctuate between $75 and $80. They might even go higher. If things really turn out as some people are speculating and oil goes up to 90 or even 100, then, things are getting serious. So let's quickly take a look at this week's key data. For the key data, tonight we have the ISM Manufacturing Index. Then tomorrow there's the ADP Employment Report, which is like the mini non-farm payroll. And then also the ISM Services Index is on Wednesday. Sorry, actually Wednesday's pretty quiet. March 3rd does not really have any data. Then on Wednesday, the Beige Book will be released. And after this Friday, the Fed will enter its blackout period. Then on Thursday, there will be some speeches from Fed officials. Friday is more important, with retail sales and also the non-farm payroll report. So this week's economic data will be relatively... All right, then. According to this situation, it's expected to slow down. It will probably drop from 52.6 to 51.5. Prices paid are still relatively high, and new orders are going down. Okay, this is a pretty significant part. All right, so let's wait. Maybe tomorrow we'll do a review for everyone. So for this week, let's first talk about the Federal Reserve officials who are currently listed. That's Williams from New York, Kashkari from Minneapolis, Daly from San Francisco, Harker from Philadelphia, and Mester from Cleveland. But I want to mention, since this week is just after the holiday period, some of the more talkative officials might come out and make statements. For instance, who? For instance, there's Stephen Miranda, then Goolsbee from Chicago. These are the ones the media likes to interview more often. Or even Susan Collins might also get asked, or maybe others as well. So it's very likely that some will proactively come out and speak. I expect that the number of officials making statements this week will probably be 2 or 3 more than what's listed on this chart. And besides that, as for this news here, to put it simply, it looks like this. First, in Colombia, it's the Washington, D.C. District Attorney Piero. It looks like the subpoenas are still ongoing and there's no sign of them being withdrawn, so it seems like this will drag on and won't be resolved quickly. Also this week, there are actually some earnings reports being released. What we want to highlight for everyone is what's more important. The most important one is Avago's earnings report, which will be released after the market closes on Wednesday and Thursday. So we'll see it Thursday morning. Also, another important one that people are watching is Credo. Then there's MongoDB, ticker MDB, which is also on the list. And then CrowdStrike, ticker CRWD. So why is CRWD important? It's a software stock, and whether the decline can stop really depends on it. Also, for consumer stocks, there's Target, ticker TGT, then there's Abercrombie & Fitch, a discount apparel retailer, and then there's MAF, a trendy brand retailer. Also, Costco will be releasing its earnings report, and then there's Gap, which is related to retail and apparel. Another tech stock is Marvell, which is a bit more Marvell is more closely related to semiconductors, and there are some connections with Taiwanese stocks. Marvell will also be releasing its earnings report. Now, let's take a look at corporate earnings. Last week, there were actually a lot. 255 companies released their reports. But after last week, we're pretty much at the tail end of earnings season. Of course, this week, the most important one is Avago. And then after that, on March 11th, Micron will be releasing its report. Yeah, the most important earnings report coming up is from Micron. Now, just to quickly go over the price changes, Apple went down, Amazon went up, Google went up, and Facebook went down. Microsoft went down, and Tesla also went down. Micron actually dropped last week, even though it closed with a green candle. Nvidia was also down, and Broadcom was relatively weak. It went down, and it looks like it managed to hold above the 200-day moving average, but actually it did not. So you need to pay attention to this. If, after this week's earnings report, it still cannot get back above the 200-day moving average, Broadcom will be under a lot of downward pressure. And do not underestimate it. Broadcom's market cap in the U.S. stock market is not small at all. AMD here also dropped, just like Oracle. It's weak and it's also going down. On the other hand, the S&P aerospace and defense stocks performed relatively well. Last Friday, they were going up. Actually, I want to mention on Thursday, I'm not sure, but on Thursday, they also had a slight increase. But on Friday, the rise was much more obvious. Actually, it seems like people started hearing some news about these American defense industry stocks on Friday, so that's probably what was going on. And since these sectors were also up on Friday, I think most people had a sense of what was happening. Also, utility stocks were really strong too. Let me explain this part too. The reason, as I mentioned before, is that natural gas is the top choice. Natural gas power generation is the top pick. As for the related sectors, I'll organize that information for everyone tomorrow. Now, let's move on to U.S. stock futures. Let's skip ahead and take a look at this part. Oh, sorry about that. Now, if we look at the performance of the main indices, the declines are still around 1% or even over 1%, which is still a relatively weak performance. Like I said, there's no way to avoid opening lower today. Since a lower open is inevitable, we want a minimal drop and a lower candlestick shadow. There are some stocks in the S&P that are up. These are industrial stocks like companies that make industrial gases. APA is an energy company, Apache Oil. Occidental Petroleum is also an oil, and there's a company that makes agricultural chemicals like pesticides. Then there's RTX, which is in the defense industry. Natural gas. This one is also related to energy and natural gas. This is after a merger deal. This one, Skydance, is still going up. EOG is another energy company. So defense and energy stocks. Basically, today's gainers are mostly in energy, defense, utilities, and a few others that are doing well. Now, let's take a look at the losers, which aren't doing so great. AES, for example, is probably a real estate related company. Carnival, that's a travel stock, and all these travel stocks are dropping. Why? Because when there's a war, travel stocks are always the first to take a hit. Airline stocks are also tanking, cruise line stocks, travel stocks in general. Today, even China Airlines isn't doing well, right? So it's pretty obvious. Lithium mining is down, SMCI is down, and Expedia, another travel stock, is down too. So you can clearly see that the losers today are mainly travel stocks. So yeah, that's cruise lines. And then airlines, they're just dropping straight down. Right now, the main thing to watch is still tonight. Besides seeing whether financial stocks have stopped falling, we also need to look at how tech stocks are performing. Even though individual travel stocks are really weak, the thing is that doesn't actually have a long-term impact on the overall market trend. So when it comes to sectors, the real focus is still on tech and financials. So tonight, just wait a bit and I'll update everyone tomorrow. The key point is right here. Also, the US dollar index is climbing, which doesn't feel great, and interest rates are starting to go up too. Interest rates are going up, but gold prices are still holding steady. Silver prices, though, have pulled back a bit. Pay special attention to oil prices. You can see the lower wick on the candlestick chart is getting longer and longer, and that's not good news. So everyone, keep an eye on this. It could be a sign. The first week, this week, and in the next week, the situation's probably going to be at its most intense. So we'll just have to take it step by step and see how things go. All right, now let's take a look at everyone's... Moving on. So just now we saw C And then we saw that the actor was talking about a shooting incident in the US. Yeah, there was a black man, he was probably Muslim, who carried out a shooting in Texas. So it doesn't look very good. Trump said he has a successor and that he can just put whoever he likes in charge. For example, Pahlavi, the first Pahlavi. Can he even get into Iran? Can he get in now? Iran is a plateau. How are you supposed to get in? By airdrop or something? There's just no way. And besides, this person, actually, he doesn't have any real foundation in Iran. He just has a presence in the media. Honestly, try going back, Pahlavi. Try going back. Are there really still people who want a king now? I seriously doubt it. Okay, so, Iran going crazy and attacking so many countries, mainstream arms sales can keep offering long-term discounts, you know? Let me tell you, actually, the impact that war has on the arms industry is really just icing on the cake. The real core is still the Department of Defense. The long-term and steady orders come from the U.S. Department of Defense. In fact, I've been telling everyone this for a while now. There are a few days when I've been talking about defense and military industry for almost 3 or 4 months now, always saying that defense and military stocks are good. At least back in November or December last year, when we were given seminars, we said that the military industry looked promising. So this is still a good sector because even if the Iran incident wraps up smoothly and quickly, the world still doesn't seem peaceful, so everyone needs to be prepared. As for military industry stocks, well, the currency market. This is a sector that definitely won't be quiet in the medium to long term. That's all I can say. So people say Taiwan can digest bad news in 10 minutes, but let me tell you something. Taiwan is a relatively small economy, and we focus on technology. So when it comes to the impact on us, it's not like there's no effect. For example, take Qatar as an example. Have you heard of it? Qatar is actually one of Taiwan's main sources for natural gas. There was just a news report. United Daily News said that Qatar's natural gas production center was attacked by drones, so production has stopped. If production really does stop, if it lasts more than a week, do you think our power supply won't run into problems? I'll just put it this way so you can get a sense of it. For us, we could probably deal with it pretty quickly. Why? Well, for us, crude oil and natural gas are an issue. But for Europe and the US, it's a whole different story. Europe, for example, for Europe, they can't buy Russian energy either. And Middle Eastern oil is a really important source for them. If any place loses 10 or 20% of its supply, that's a life or death situation. Ah, that's right. It's actually a really big deal. So all I can say is everyone should probably pay a little more attention to this. For us opening accounts, the impact is obviously much smaller because Iran doesn't have any AI or AI data centers, so it doesn't affect us. But the problem is it will still have a big impact through crude oil and other things. All right, so next, let's take a look. If there are no other questions, that's it for today. We'll see you tomorrow. Okay, bye-bye.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.